We look at real estate transactions all day long. We don't necessarily look at financing software businesses, but there's also private credit for non-software enterprise businesses, right? Just traditional operating businesses. But when we're looking at real estate transactions, in your mind, kind of what's the difference there when we're looking at the collateral things, and how does that differ a little bit than what we're reading in the press?
Yeah, it emanates from like news headlines, right? So the 24-hour news cycle, you see a lot of financial institutions talking about issues in AI, right? With the growth in AI and all of the impacts that it's having on both the economy, jobs, and really software as a service. I think that's one of the things that started the ball rolling with this private credit discussion. The biggest difference between the private lending and the private credit that is being talked about in the news today and commercial real estate private credit is that in commercial real estate, you have a hard asset. You've got a building, you've got a tangible item that you can look to as a potential source of repayment, which just dramatically improves your recovery in the situations that would come about in a downside scenario.
Certainly top of mind in the press, right? And when these situations arise in the business world, I think that they have a tendency to snowball and to escalate a little bit, right? Where you start to see maybe some issues with certain, in the case of private credit, certain issuers, certain sectors, gets a little bit of negative press, and then I think that just begets more press. There's certainly cash flow that's coming off of a real estate asset, whether it's industrial, it's office, multifamily, whatever the case might be, because it's leased, it's generating cash flow, and that increases value or creates value. But sometimes we'll look at a situation, maybe it's an industrial asset, and the lease is coming due in a couple of years, and we're saying, hey, there's value here, based on the lease that's in place today, and we think they'll release it at a higher rent in the future, creating more value. But we'll also look at the downside of that and say, what's the dark value? What is that thing worth if it's just empty and they don't effectuate their business plan? Right. That helps us in this space, because then we can look at that and say, okay, our downside is protected here because, to your point, it's at whatever the location is, they're not making any more of it. A little bit different than what we're seeing in some of the headline news for private credit.